I'm Greg Tran with Gregory Group Real Estate here in Austin, Texas. I'm giving a market update today for October 2020, and we'll tell you a little bit about what's going on in our market, and then towards the end I'll give you some reasons for why I think these conditions are here. The first thing to report is we still have really strong demand, and it's a really tight market. It's so tight that even a lot of the home builders building the new home communities, a lot of them have sold out, and a lot of them have wait lists. And when new inventory comes on, they actually have people bidding on homes. This is something that I haven't seen before, where people are offering more on new construction homes. But this is definitely what we're seeing now. We're also seeing that the home builders are quickly raising prices. A lot of them are doing a handful of homes at a time for each phase, and then when each handful is sold out, they're raising their prices. Part of this is because building costs are going up. With all the demand, there's a lumber shortage. So I've heard people say that lumber is up 50%. Some people are saying that it's doubled in price. So that's definitely, of course, a big component of homes. And if the builders' prices are going up, then those increases get passed on to the buyers. Another thing driving buyer demand is the interest rates, which I've mentioned before, but they are still really low. In fact, we had a buyer just today tell me that he locked in his rate on a 30-year fixed mortgage for 2.6%. I've never heard of rates this low, and really, if you're a buyer who's financing, not paying cash, this is probably a really good time to look into seeing what you qualify for and seeing if it could be a right time for you to make a purchase. We're continuing to keep a really close eye on the statistics in the market week by week so we can see if anything is changing. For now, we're seeing a lot of the same. I've mentioned before about how few listings have been coming on the market this year, and it's a little different now. The number of listings coming to the market is a little bit more, but right now in October, usually the market has cooled down a little bit anyways because of the summer buying rush. However, this year everything has gotten shifted back a bit because we lost a month or two at the beginning of the COVID crisis. We are still seeing a lot of buyer demand in the stats though. Just looking at the last 2 weeks, it's been about a 37% increase in the amount of homes going under contract than we were at this time last year. That's a huge difference. The luxury market is really moving so much more quickly this year. When I look back at it, luxury homes are selling at almost double the rate as we were last year, which is a really big jump. I see two main reasons for this though. First, we're seeing appreciation, of course, because there's so much demand out there and the supply is low. So with prices going up, a lot of the homes that were under $1 million before now are over $1 million. So of course, every one of those sales is counted as a luxury sale now. Another reason is we do have people coming here from across the country. People who are leaving maybe the West Coast or the East Coast for various reasons. On the East Coast you have a lot of density. On the West Coast you've had fires, you still have the density. And on top of that, a lot of people who have the high paying jobs, frankly, don't have to go into the office. Right now everyone's working remote, and they're finding that they don't have to pay the crazy prices that they pay in San Francisco if they're just going to work remote anyways. So we are finding a lot of people from the coast moving here, and with the lower real estate prices we have here, honestly it seems like a deal for them. Something interesting is when this pandemic started, people thought the real estate market was going to get crushed, and it just has not played out that way. In fact, it's done exactly the opposite of what everyone's predicted, and it's gone on this skyward path. Also, other people were predicting that with forbearance starting to end and with the $600 government stimulus checks ending, once again we would see a lot of distressed properties hit the market. But it just has not been the case, especially here in the Austin market. And I have a couple theories to share on why that might be. First of all, take a look at this chart here. If you look at this is broken out by different sectors in the market. And if you look on the left, these are a lot of your more high paying jobs, financial services, tech, those type of things. And on the left, these jobs are also the ones where people can work from home, make the same salary, and most of them have kept their jobs. Now, if you look at the right side, this is where the unemployment has hit the hardest. These are the sectors we'd expect. Retail, hospitality. We know that hotels and restaurants, they are just having a really hard time right now. And when you look at the right side, these jobs usually pay less than the ones on the left side. So the pandemic has not affected everybody equally. It's affected the people on the right side just so much more. Now, since those are some of the lower paying jobs, a lot of times those actually weren't the people who are buying homes. And that's one of the reasons why the home buying hasn't been affected that much by it. Now look at this next chart I have for you. Here it's broken out by age group, and you can see that the younger crowd, the people in their mid-20s or younger, they are having huge unemployment right now. They are much more likely to be the people who lost their jobs or who can't find jobs right now. But once again, this part of the population wasn't really the people who were doing a lot of the home buying anyways. And you can see as people get older, these people have much lower unemployment. And really, it's some of the older folks that have some of the more high-paying jobs. They haven't lost their jobs. They're doing just as well. And these people are the ones who are spending more time at home, wanting something new, and frankly are able to go out and buy a new house or buy their first home. And this is a big reason why you don't see the real estate market just getting hit too hard, even though you know a lot of people are out there and unemployed right now. I know these market updates can be a little dense. There's a lot of statistics, but I'm trying to break it down and just explain to you why certain things are what they are in the market. If I had to sum it up for you, it's a really strong market. Prices are going up. If you're on the buyer side, you're going to compete. It's still multiple offers, but at the same time, you can get really low interest rates, so it's going to do your mortgage a lot of good for that next 30 years. If you have any questions about this market, how to succeed in it, what you think you should be doing based on your situation, feel free to reach out. I'd love to have a chat with you. I talk to people every day and really just talk to them about their situation and try to help them figure out what's the best move for them. Just reach out. Love to chat.